Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. Biggest news of our morning so far is the M&A in biotech land. We're going to talk about some sympathy with that deal and the sympathy plays regarding that. We also have some movers. AMD has come to a big line in the sand. We'll talk about trading IPOs, specifically Chewy, on Friday. We'll take your questions from our chat, and we got a busy day. 3 guests on the docket today. First up at 8:15, we'll be joined by Kenny Glick from hitthebid.com. At 8:35, we'll be joined by Chris Camillo, who is he's a founder, he's an independent investor, and he's the host of DumbMoney on YouTube. And then at 9, we'll be joined by Stephen Kalayjian, the co-founder of Tocker and their chief market strategist. So a busy day, 3 guests on the docket today and every day this week as we head towards the trading summit. Joel, what is the word here overnight?
S&P's up 4 1/4 handles. Your opening print at 6 p.m. last night is your low, 28.95. That's just above the close, so good level to keep an eye on for continued upside. We hit 29.0475. That's kind of in no man's land. It's just a little bit above Friday's high. Big number on the upside for this week ahead of the Fed meeting would be that weekly high at 29.15.75. Crude down 52 cents here, under $52. Just got a pop last week, but not holding on to the rally. Recent low of the move in crude has been 50.60. Gold down 490, keeps acting like it wants to go to 1400, but beaten down now 490 at 1339.60. Silver back under 15, up 2 cents at 1482.5. And the reason I paused there is Bitcoin up $882.50 at 9,315.
Never be short Bitcoin into a weekend, and even a Father's Day weekend. No holiday weekend.
Father's Day weekend.
You can't be short Bitcoin into weekends. The people who are short into the weekends aren't listening to the show. We talk about every big move always happens on the weekend. My conspiracy theory is that liquidity is lower, so if you wanted to push the price higher, you're going to do it when nobody's at their desks, and that's the easiest time to do it is going to be on the weekends. I stick with that theory because all the big moves always seem to happen on the weekends.
Is that your number one trading rule, Dennis?
Yeah, never be short Bitcoin on a weekend.
For 19 years of trading.
We've been giving you this, guys. We've actually, for as much as me and Joel don't like Bitcoin, we've traded it, like at least on paper, pretty dang well, at least in the last year. We've done pretty good. When he's 3,500, we've been bullish since 3,500. We really have. I say bullish. I've been saying 10,000 now on the show. Every time we say I'm still saying it's going to 10,000. I'm not a believer in the long-term story, but I'm a believer in the technical still here on Bitcoin, and you can't argue with it. This thing wants to go to 10,000.
All right. Well, one of my talents is developing a trader like you, Dennis, but we got another trader in budding here sitting on the desk right next to me.
We do.
Spencer Israel.
Not a future trader.
Oh, you're not going to trade futures? You're just going to trade stocks?
I'm not a trader in the future. I'm not going to become a trader is what I'm saying.
So Spencer.
Not in my career.
He got down and dirty in Chewy yesterday. Spencer. You got dirty early. Tell us about it. Tell us about your trade.
No, I said right when we were wrapped. Well, I said it like during the show at like 8:30 that I thought Chewy could run, and then right at the end of the show, I went from like semi-convicted to like super convicted.
Conviction, but Spencer conviction buy list.
Conviction was super high. I was like, this is gonna run. So I got in at the opening print.
What was the opening print?
It was 36, I believe. This is all the way back to Friday, so forgive me if I forget. But
look at this, Spencer. $36 IPOs.
Yeah, which I literally never do. And so the opening print was 36. I got in it there, and I was using Webull, which is one of those free trading apps, and I didn't know how to put in a trailing stop on the app. So I didn't have any stops in place. So I just watched the chart obsessively for like 20 minutes because it didn't open till the 11 o'clock hour. And then it went, what would it go up to? $41. And
you got executed on the opening print at 36. Then what?
Then I just watched it like a hawk. Watched it like a hawk, and there was a couple big red on the 1 minute chart. There's a couple big red candles at like 11 time, like 11:25, 11:30, that area.
Yeah.
And once it hit 38.50, once it hit 39, I was like, I gotta start getting out of here. So I got out.
You were selling on the way down, not the way up.
I was selling on the way down, so 38.50 was my executing price on the sell. So
$2.50, not too bad.
Yeah, for your first time trading an IPO, last time trading an IPO.
This might be your gig. Maybe this is your gig, just trading the opens on IPOs. You're the inefficiency trader. I will tell you, and not that I'm an IPO trader. I think it's too much risk and it's hard to control, but that's why I like trading the open. It's where the price is the most inefficient. It's where you're going to get the biggest move. You get caught on the wrong side, though, it can get ugly in a hurry. So you got to figure out how the hell to get out of there when you get caught on the wrong side. But I'm a big fan of trading the opens and stocks. We know that. I talk about my opening trades. I trade the entire pre-market, positioning myself for the opens and buying stocks that I feel are opening too low, selling stocks short that I feel are opening too high. So here you are using all those tactics we've talked about on the show for the last 5 years and trading one of the hottest IPOs in a long time, Chewy. So good job there, Mr. Israel.
And I was and there's someone in the chat saying, they took it home short. I don't know why, I was just super convicted that it was going to run, and I was right for like 20 minutes. And once I realized that I was wrong.
Right? Well, you were right. You just didn't get out fast enough to be continuing to be right.
To hit the top, sure, but whatever. But once I realized that, I was wrong for the day, right? That it was not going to close higher, that it was going down back below 36, or once it looked like that could happen, I was like, I got to get out of here.
Yeah.
I'm wrong. I was right for 20 minutes. I was wrong for the rest of the day. So I got to get out. And it was never going to be an investment. It was always going to be a trade. So
that's the key too, is identifying what is this when I get in this. And a lot of newer traders will come in here and say, okay, I'm going to make some money. I'll tell you, this is how it goes down. A lot of newer traders will come in and say, I want to make some money on this Chewy. And it opens at 36. And it runs up, and then they're like, it comes back in. Or, a better example might be on the, well, not the Lyft, on the Uber one. When Uber opened, because it opened right at the highs. So they're going to say, I'm going to make some money on this. And then it starts going down, and they're like, wow, I'm going to, wait till I get my money back. And then you wait to get your money back, but you wait to get your money back, and before you know it, you're down significantly in a position. So the key is to identify as a trade and have an out. I'll always say you can put on any single trade. I'll never argue with your strategy. Even when I'm in, in New York and talking to a lot of you guys on a one-on-one level on Thursday, it's something I'm going to stress. You can put on any trade you want as long as you identify where your out is going to be. You need to have a contingency plan so that you don't turn a trade into a long-term losing investment. That's what people do wrong.
Spencer, I thought you were like holding that. You thought it was going to be like a Colt stock.
Yeah, I did. Yes, I did. And then I was wrong. By noon, I was wrong. Right?
Is this a trade? He did it right. He had his out. He locked it.
Noon, it was back at $36. I was all right. I'm clearly not right here. So, you got to go with the flow.
Well, I think you were right, and you got out. And you know what? I've done a lot of times. You stayed in the trade maybe a little bit too long. You didn't get out, as it was going up, which sometimes it's easier to get out when it's going up. But you know what? You got out before it had the big collapse. You got out making some money. You did a good job. So good job, Mr. Israel, trading Chewy.
I'm batting 1,000 as a day trader.
Yeah,
and that's
what? This could be your gig.
I told them to stop.
We better move on. Spinner's getting upset with us 10 minutes on Chewy. I agree, Spinner. Right. We got to move on. We have other stocks to talk about.
Moving on, we have some.
We're on to the Beyond. Let's go Beyond Meat just because it's a crazy stock too. Just before we go into all these mergers and Bitcoin and all the other fun stuff. BYND is up another $11 here. The story is not over. I kept thinking, I don't think the story is over. I've said it a few times. I don't think it's over. The JP Morgan was a cool off period. I did not get back in. I wish I would have when it got up through 150. I actually took Friday off. So I'd never do that, but I took Friday off. It was my wife took me out to Collingwood for my birthday. It was a nice weekend, or a nice at least Friday, and then into Saturday. So I took Friday off, which I never do, and Beyond Meat did break out through the 150, and now it's obviously in breakout mode here again. So you start thinking, can it retest that high, 186? It's possible. It's possible. The only problem is as you get close to that, that's going to be overhead, some overhead supply up there, but it wasn't up there for very long. So you know what? Even though this thing is ridiculously overpriced on a fundamental basis, the story is not over here yet.
What's it just the Bitcoin people eating Beyond Burgers, or any news on it, or what do we got?
No, I don't think. Is there news on this morning?
Nope.
No.
Up 1060.
They just squeeze them a little bit more.
Thought it would pause at the 50% retracement, which is 157.55. It did pause and went down, but man, oh man, this came shot right back up. So I don't know, 157, get into yesterday's range. Let's see, what was the high from yesterday? If you want to try a potential long in here, it's a gap fill at 157.90. The 50% is right at 157.55. So there's a potential area of support. On the upside, the only thing you have here is the all-time closing high, the same day that it hit 186.43. The all-time closing high, which some people might be interested in, is 168.10, and that's a soft level. If you're looking to exit a long, sure. If you're going to try short, I don't know. You have to wait. Perhaps look for that all-time high at 186.43.
All right, let's move on to we just talked Bitcoin. We can just quickly say that too before we get to the merger. Up over 9,000 here. I mean, do you think it's going? I think it's going 10,000. I've been saying that.
Yeah, we've been saying that for a while.
You think so too, still?
But the question is, what after 10,000?
I don't know. All I know is I think it's going to 10,000. So obviously I'm kicking myself that I didn't play this in any way whatsoever because we kind of called it all the way up, but. Ride blockchain, if you're looking at the stocks that are trading up, we know that gets the lift, it seems like, every time Bitcoin, and then about a few hours later it starts to drift down. So obviously you can say, oh yeah, there's a short-term day trading correlation somewhat, but look at the chart of Bitcoin over the last month and a half, and look at the chart of Riot blockchain over the last month and a half. You can say this is not the best way to play Bitcoin.
I'll bump my target here. I mean, since we're getting there from 10,000, I'll bump it to 11,250 because
you're going to 11.
Yeah, because February and March of 2018, you had highs. This is the futures contract, folks. You had highs at 11,300 and 11,200. So it's going to perhaps take a little while to get there. When did what was the exact date that the SIBO decided to delist their contract? I know it's going off the board.
That was the low.
June. It was pretty.
It was pretty much close to the low at 3,500.
Was it?
Pretty much. Yep.
Yeah.
Very close.
I mean,
they marked the bottom.
Yeah, the futures. Well, not getting as much. The volume's kind of getting anemic again. Some decent open interest here. Open interest steady at 1622. So when no ARBs around, the Bitcoin buyers play.
Although I do wonder how much of this is the weekend bounce and how much of it is the fact that Bitcoin got a lot of some big mainstream media love over the weekend, and I feel like that's an indicator. The Winklevoss twins of Gemini, of Facebook fame, and now of Gemini, where they're trying to, they have an exchange. They're trying to launch a Bitcoin ETF. They got profiled on CBS Sunday Morning, which is a show that I watch every Sunday, and I don't know that's a really big show, and I feel like when you get big,
that's true,
mainstream media coverage,
for sure,
that helps. So
for sure, because it's retail driven. A lot of this is still retail driven. It's like a cult thing. A lot of it, I think there might be some institutional action. Mark Yusko saying some institutions are starting to get into it, but this has been mainly retail driven forever. So, you get major coverage like that, it's definitely can drive the price. But we've always said, on the weekends, it seems like that's when Bitcoin has its biggest moves higher. What about the Facebook news? We had the Facebook news on Friday. Now it's up another $2.55 here this morning. They're coming out with their own cryptocurrency here.
Not news though. The news was who they're working.
Yeah, it was crazy. They got some great supporters in there and people who are companies that are going to use it.
Right.
I mean, it's pretty big. It looks like they're trying to go head to head with Bitcoin. Are they not? Is that not what this is?
It's tough to say because it's an internal cryptocurrency, so it's tough to say exactly what they're trying to do. But yeah, I mean, Visa, MasterCard, PayPal, Uber, all working with
huge.
Yeah, RBC. I think so. Yeah.
Working with Facebook. I mean, Facebook blasted off on this and it's still continuing to go. It's got the buzz going here right now. The only thing I will say is, we go back to 2 weeks ago and I'm long Facebook, and I'm looking at this and thinking, wow, this thing absolutely got killed a week and a half ago. And now we're popping up. We're coming out to a huge level at 185.
Yep.
I'm still like selling it and trying to rebuy it lower, but trying not to trade my long-term accounts. But I don't know, like this Facebook chart is tricky. It's just it was such a wicked sell-off back at the end of May, but it's been such a wicked recovery too. I mean, this is a complete V here. You're coming back into where you started the sell-off from, though, at 185. I got to think you're going to run into some resistance up here, no?
You're through the 50% here. I mean, I see it on the dailies, 198.5 down to 161. So there's your, what is that? 71, 81, 91, 37-point move, divide by 2. What's that? 18. So you're through the 50% there. So I just would look at the dailies there, that 185 area, a couple highs at 184.5, 184.71. So might get a little pause there, but also maybe market dependent here if we just blast off to all-time highs. But we're 2 minutes late here.
It's okay. I'm going to bring on Kenny Glick on the fly. Going to call him directly right now. Kenny Glick is
he's not on Zoom?
He is not on Zoom.
Good morning.
Good morning, Kenny. How's it going?
All right. What's up?
What's up?
What's up with the Zoom? You're not on Zoom.
I don't even know what Zoom is. I don't know. It's some bad idea.
It's ZM. ZM, Kenny. Come on.
He's doing it on purpose. You know what Zoom is.
He knows what Zoom is.
I've heard of these things. I still have an AOL email address, guys.
It's working for him, though. It's working for him. Kenny, we got some symbols in the chat just before. So Armat wants to know about Roku. This stock, I'll just give you my thoughts, has been unbelievably resilient, even in the May. Think about what the markets did in May. And this stock went up in May. And it goes up in June, too. I mean, the relative strength in this thing is just incredible. Is this one you get down dirty in Roku?
It's going to 120 because
nice.
I think you guys were talking about the IPOs, but this is the most reminiscent of 1999 trading it's been since 1999. I'm very excited. Every one of these momentum stocks is really working out. Just suspending your disbelief and putting rationality aside, I don't think there's any reason this thing shouldn't go to 120. And one thing about Roku is I have still no idea what this company does. I mean, I know they seem to be everywhere. I don't get it, but I don't have to get it because it's just 4 letters and a price to me.
It's the pipes, Kenny. It's the pipes that gets the Netflix to your TV.
Right. So, but how many different one of these platforms do we need? I mean, we have, if you got the Hulu now, you got your Amazon Primes, you got your Netflix, you got your Rokus, you got,
right.
It seems like there's a million of these out there. Apple TV, Apple's going to do something else. Disney's going to have one. I don't get it. But I don't need to get it because I don't get fake meat, and I own it because I love some fake meat.
Nice. You're long the fake meat. We like the fake meat too.
You can't fight this thing.
It's unreal. I mean, JP Morgan put the damper on it, but we were saying I don't think the story was over. It cooled it off. It cooled it off for a few days. You know what? It's right back hot here again, and this thing could challenge that high at 186.
Right, and if it breaks up, you're probably going to see 200, maybe 250, because this is now the Tilray, if you will, of fake meat.
It is. It's Tilray. This is Tilray all over again.
It is. So why not just enjoy the ride? Again, suspend disbelief. Rational thought has gone out in 1982, I think. So this is just phenomenal stuff, And I just want to give a shout out to all the Ameren people that woke up this morning and saw that letter A and a word takeover. Oh my God, is this it? No, it was a Ray. Sorry. You got to wait another 22 more years for Ameren to get taken over. Another Monday has gone by. Sorry, bag holders.
Caddy, so talk about the beyond. So you're logging in here right now, and this story we know. In all likelihood, and I've been saying this, when we look at this, 2 years from now, Beyond Meat's probably not 100. Even looking at this 6 months from now, it's probably a lot lower. But, how do you know when the ride is over? Like, what'll be the time when you ring the register? What'll be your signal you'll be looking for to say, hey, I need to be careful or I need to get out of this thing now?
All right, this is a very rare thing for me because I don't own many stocks right now, but these IPOs have been phenomenal. But do you want to know how? Take a look at the chart of TIGR. That was an IPO that when the other IPOs weren't working, Tiger blew out and just started going crazy to the upside.
Yeah.
So as long as the stock keeps breaking prior day highs, we kept getting involved. It's not like we had to own these stocks like Crowd and Revolve and Fever and, the rest of these IPOs and the Beyond. I'll wake up in the morning and say, okay, look, Beyond's down. And then next thing you know, it goes green and I get back involved. Beyond is the one that I've owned more often than not. Again, I'm not a big fan of holding overnight, but you're looking for this huge blow off top candle where you get a new high and that same day you close negative. And generally the momentum is over. And if you look at Tiger, that day, not only was the momentum over, but the stock was over. And that thing's gone from one of the better ones to just a plain old pump and dump. And it's probably because, any of these, the Chinese version of something doesn't ever work out. But as far as Chewy, kind of had that candle right away. You got past the 40, but you didn't get to 42.50, I remember, and then it broke back under 40. And that for me was the end of the day on the Chewy, even though you caught a bottom, a little pop at the end of the day. But when the momentum is over, it's usually an intraday blow off top reversal candle. And most of the time they don't come back. So as far as I'm concerned, I'm still bullish all of these IPOs because you've got some pullbacks, but you haven't really broke back down. So this Crowd, the CRWD, still interesting. The Revolve, RVLV, Fever, whichever, I forgot which one that one, FVR. I don't even know what these companies do, obviously. But the momentum is still there. And until they roll over and really die, then I'm still a fan of what Beyond Meat just did. You'll get your sellers, you'll get, those last buyers to get wiped out, and then it comes right back. So anybody that was looking to buy this thing at 125, they got their opportunity. And look where we are now. We're almost back to, 165.
So you won't try and pick a top on it as so much. You'll just kind of like trail and stop and trail and wait for that one bad day. And then you'll say, hey, I left this on the table, but I'm getting out on the downside. Instead of actually trying to pick a top, you'd rather get taken out on some downward momentum.
Absolutely. Yeah. I mean, Beyond Meat that day was fun, when it kind of stopped going up at 183, 184, whatever that was. But again, I'm going to be more of a day trader, going forward on all these anyway. So I'm not going to be holding it overnight and then wake up one morning and it's gapped down. It's usually going to be an intraday event for me anyway. So today with these IPOs kind of mostly gapping up, I'm looking at CRWD and RVLV and Fever and Beyond. They're all gapped up. So my immediate default as a trader is, okay, let's see if they go negative today. So I'm just looking for that, those gaps that get, faded, because my favorite type of trade, again, these have been fun. I mean, this is a lot of fun. I haven't had this much fun, commenting and talking about stocks in a long, long time, because this is just a real microcosm of what trading was back in 1999. You didn't need to know what was going on. As long as the stock kept breaking new strike prices, and again, 25 gets you 27.50, 27.50 is getting you 30. That's why when Chewy opened up, as long as it was opened up under 35, it got through 37. I'm thinking, all right, let's look for 40. And we got our trade. And that was all we did with, as far as Chewy is concerned. Once it broke 37.50, we looked for it to get to 40. We didn't get greedy. And then, kind of lucky that we didn't buy it again, but, looking to see how this thing pans out. But for me, trading is all about Broadcom on Friday. Here you got a huge company coming out with whatever they said, disappointing this, doesn't matter to me. As long as there's some negativity and the stock's gapping down on a stock like that, that's where I'm looking to buy. So no brainer. I know Dennis loves that trading at the open. One of the first times in a long time I traded right at the open. Didn't matter what price. I'm buying Broadcom at the open because here we have a huge company, great company. The stock's going to be a buy on dip. Might not recover that full, 15, 17 points that it sold off, but under 260, we were looking to buy. Plus you had Friday options where you could have bought some 260s, 260, 250s, even the 265s worked out. That's my style. Still going forward. I love these gaps on, earnings reports or news and going the other direction, especially in a market that refuses to go down.
So just real quickly, going back to the Beyond Meat, what made you take it home this time? you know, as opposed to, because I mean, I know you're not going to buy it up $11.50. Was it the price action on Friday? What made you take this one home?
The big number 150.
Okay.
Listen, I'm kind of shocked that even got back over 150. I thought that 186, Dave, and the blow off top a little bit there. And once you got under 150, I thought there'd be a struggle to get back over 150. And the strength that this thing showed on Friday, I was like, you know what, they're probably going to gap this thing up 10 points. And, you know, again, I'm not taking huge positions. So I'm kind of goofing around more or less. But, you know, that's the kind of attitude I had. If they're going to keep the irrationality going, I'm going to partake in it as much as I can. You know, that's really the extent of it. But for me, it's a sell now. You have to be looking to sell this thing on this big gap. You know, and if it breaks back under 160, you're going to probably see, you know, another 4 or 5 points down. And I wouldn't be surprised to see this thing right back at 156 today at one point. And if it breaks back over that 165, you might make a run for the border and see that 186 again today. So for me, it's just, now that it's gapped up, it's a sell. You know, we played the gap. I'm a seller, and that's why I play the fade. Guys like me who took it home over the weekend are saying, hey, a 10-point present. Boom, let's sell it. And that's why from, last 45 minutes, or last half hour, it still looks like a sell. You're probably going to rip back down to 60, but this thing is a crazy one,
Sure is. It sure is.
Could it go to 300? Obviously. I will never put a price target on these momentum stocks ever, because you never know what's going to happen.
Yeah, probably get a little bit of short covering in there too. I know there's a large short interest. And think about these stocks. If you're not buying them on the way down, you have no idea. When it's at 140, you don't know it's going to 125, right? So you put your bids up on the way down. But the reason we're having you on today is because you're going to be joining us at the Benzinga Trading Summit on Thursday in your hometown, New York City. We're all looking forward to it, Kenny. Just give us a sneak preview of what you're going to be talking when you're up there in the morning trading session. That's
a great segue. It's professional of you. That's great stuff. Yes, my friend, you finally get to meet us in person. Well, I'm going to be talking VWAP. I'm going to be talking these time frame VWAPs a lot, and these fades that I love so much. Really, I've been trading specifically around, VWAP and multi-day VWAP for the last 4 or 5 years around these trades that I've been doing my whole life. So, for instance, let me see if I could quickly pull up the chart on, Broadcom, but all we're looking for are, I'm going to show people how I build these ranges, and that, less is more for me. I trade around the VWAP. I trade a very specific setup, and it works pretty well. And again, I think every trader has the same thing where we overtrade. You're sitting by the computer. Again, I'm speaking to the guys that are, hardcore day traders still, that we don't want to get up. We think we're going to miss something. Even in the middle of the day, you don't want to get up just in case something happens. I'm going to show you that between, for me, it's 9:45 to 11:30. You're gonna find these VWAP trades. You're gonna find trend reversals in that time frame. And then later in the day, you want to come back to the desk at 3 o'clock. Again, like Chewy was an interesting one where this thing was hovering below the VWAP later in the day and then got back above it, which made it a new buy. I'm going to be really talking VWAP the whole time, and how even just on the 1 minute, a lot of people aren't using this. They have so many indicators on charts, and a lot of people swear by a lot of different things. Not having VWAP involved in your trading, you're doing yourself a disservice. No matter what you do, add to it. I only use it. I use the 1 minute and something we call, multiple VWAP. And, I have an intraday 1 hour VWAP, which is, really has come in handy for you guys that don't want to get up from the desk, you degenerates who are trading between 12 and 2. But I can help those guys also, because again, the market and the stocks seem to live between these levels that I follow, and it really is a great roadmap, and it really just cuts through everything else. I mean, if you look at all the studies and all that stuff we can choose from in this industry, to have just 3 or 4 things to really concentrate on, it kind of self-instills discipline in you.
All right,
so that's what I'll be talking about.
A man with a plan, Kenny Glick, owner and creator of HitTheBid.com. You'll be able to see Kenny live and in person at the Sheraton Times Square in New York City. Kenny, looking forward to seeing you on Wednesday.
All right, I've been stretching out. I know you want to go out dancing Wednesday night. So I've been working
all red-eyed Thursday morning.
Taking my conjoint and all that stuff, because I'm getting old.
No, Benzinga has a bed check at the hotel. We got lights out at 10 o'clock. So no, actually not. We're gonna be setting up at 10 o'clock. So we'll figure something out, Kenny. Well, I'll be talking to you on Wednesday. Thanks for joining us.
All right, thanks for having me on, guys. Good luck today. Good luck, everybody.
See you, Kenny.
Gonna have some fun with Kenny out there. Not only is he a good trader and a good friend, he's there's a lot of fun to be around. S&P futures just hanging up 3.5 handles here, 28.98.5, hanging above the pre-market low, kind of quiet here. Dennis, 8:30 has passed by. Any notable imbalances here?
Small again. We've been seeing this has been the theme. Our GE guys there every day for the last 5 years. I feel like it's 100,000 to sell. It's every single morning. It seems like this is just always the stock to be short going overnight, come in, and unless it's news, it seems like it always either is flat or it gaps down just slightly. I mean, it's ridiculous how much consistency there's been in the sell imbalances there in GE at 8:30 in the morning. Procter & Gamble, 69,000 to sell. That does stand out. I mean, these consumer staple stocks continue to break out. This is a bubble. You want to talk about stocks that are in a bubble, and I have no idea why they continue to go up. But when do you really want to go and pay 27 times or 28 times earnings for PG with almost no growth? I mean, it's actually surprising that the market's been as resilient as it has, and it keeps bouncing back. With these consumer staple stocks continue to hold up too. So I don't know when this bubble bursts, but not for me. I trade these things all the time. Day trading, fine. Trend is still your friend. Long-term investing, if you're buying this thing at 111 now, you're doing it backwards. I like buying the consumer staple stocks when they're in the gutter because they seem to always come back. We talked about it back when it was in the 70s, back in 2018. That was the buy. Now, if you're actually looking at it, I think it's the long-term sell up here at 111. I think you'll eventually get a shot back in the 90s on PG. So not a fan here buying these big consumer staple stocks up there, but just talking balances, 69,000 to sell this one. So you have one institution looking to lighten up. Really is not much else happening.
This stock has traded higher in 9 of the last 10 trading sessions. That one outlier was a nickel decline on June 10th from 108.77 to 108.72. So big winning streak, new all-time high, 111.75. We could talk about the big level here. Does anything at 112? Any institution?
It seems like they're always every point. It seems like on Procter & Gamble because it's never been here before. So it's never been here before. There's this institutions that just say, okay, give me out 100,000 at 112, another 100 at 113, another 100 at 114. And if I look at the book, it's what I'm seeing. There's 89,000 shares for sale at 112. There's an institution at 111.90 getting me out earlier than that, 28,000 shares. 112.50, 49,000 shares. But you know what? It seems to just chew through all these levels. At 115, there's 144,000 shares. So always you got to watch when you go. It seems like you take out the whole number, the big number there, and then you march up to the next whole number, and maybe you pause there for a day, and then eventually you take it out too. But you always got to be aware when you get into a big whole number that stock's never been to before, a widely owned stock like Procter & Gamble, you often do run into some size, a big seller that might slow it down for a day or two. Sometimes they chew right through it, but a lot of times it'll get up there. And this is another example. You go up and, when you close to 111.20. So, a big move for Procter & Gamble is often, 50, 60, 80 cents. So if it did have a rally, which, we have a sell balance this morning, so I don't know if that's going to happen, but, it gets up to that 111.90, 112 area, it might stall out, and sometimes they're good to play for a short and they come in. And then, eventually if it takes out the 112, then you start thinking 112.50, kind of like what Kenny was just talking about.
Yeah, looking at the average daily ranges on that, when it gets, we talked about this before, when it gets up to like a whole number, like 112 today, where's it trading? 111.20, that will be, an 80-cent range. Near the end of the day, they might not be taking out that 112, unless you got a ton of momentum, but you get it close at 111.85. You have a good market the next day, boom, more of a chance. But there's the institutional size in that one. And 8:35 here, Spencer.
Yeah, we're waiting on Chris. So let's go to, we actually never covered the merger today. So let's go to that. That's ARRY Biopharma, ARRY. Again, taken out here by Pfizer for $48 a share in
cash.
Was this rumored back on May 21st? Because he had a huge move in the stock. I don't follow the stock closely. I know the stock I trade every once in a while, but I haven't been following the story closely. What was the big move that we had in ARRY back on the 21st when the stock went from 21.94 up to 26?
That was a good drug trial. They met their primary.
Okay.
Yep.
So that was a big drug trial. And then, we've been going up ever since. And sometimes these stocks have the big trials. Sometimes, after is a buying opportunity. Sometimes when they have a secondary to fund the next round of trials, sometimes on those buyback pullbacks, I don't know if it had in this case, but it's continued to go up. And then obviously now gets taken out. So congratulations to the longs. Our risk arbs are putting an 80-cent deal on, obviously, an 80-cent price tag just on basically the time value of money probably here, 47.20 because the price is 48. So it's a big move for ARRY. It's a small move for Pfizer. I wouldn't expect a big move in either direction from Pfizer on this. There's 33,000 shares to sell at the open. It is trading up a nickel here this morning, but this is a small deal for Pfizer, so I wouldn't expect a big reaction in PFE shares.
We've seen this before. Smaller, big. It depends on how the institutions view the stock after this. It's had a very, very nice run up since mid-April when we were down under $39. I'm just going to keep an eye. If I was a long-term holder of Pfizer, I'd just be keeping an eye on like 42.45. You're looking at the daily charts. 1, 2, 3, 4, 5. I see 7 maybe of your last 10 lows right in that area. So 42.50, good in the north. On the upside, one high at 42.87. People are leaving 43 alone right now. 5 consecutive highs in the higher 43, or not higher 43. Let's call 43.20 your major support or major resistance, and 42.50 your major support.
I own Pfizer, Merck, Lilly. These things obviously move a lot less than the overall market. They sometimes move counter to the market. They've held up fairly well. I still own Pfizer. But a little bit, a lot of these things have some pretty impressive runs. So I think if you're coming in buying these things now, I think you're late to the party too on the big pharma. It can almost throw it in the category of a Procter and Gamble sometimes. I mean, Merck and all these, are seen as more defensive. So if the market goes to roll over, these teams seem to hold up better than the overall market. It's why I like them in my long-term portfolio too, because we know I like lower beta and I like getting paid. And a lot of these things have dividends. And they've always struggled for growth. It's probably why Pfizer, is doing a deal like this. They're looking for smaller deals. A lot of times these bigger pharma companies need to buy growth because they're just so big. So anyways, Pfizer takes it over. XBI trading up significantly on the ARRY deal. XBI owns 2.2% of ARRY. So if you look at ARRY trading up 59% here this morning, you quickly do the math and say, okay, well, about 1.3%, that puts the XBI up. XBI is up 1.6%. So, it's up a little bit more, and that's probably because it's going to be some other pharma stocks, smaller ones, that might actually get a lift on this too. I'd actually would think it almost maybe pop more than that, because I would think there'd be some XBI holds the smaller biotech stocks, and we know it can move. And there may be some other ones that move here as well. Just off some quick research there this morning, trying to think about, other potential acquisition targets. I don't know if there's anything. It's a tricky thing to think about. Clovis Oncology comes to mind. That's the one that popped in my head, CLVS. Just stocks that might get some love off this. CLVS has been in the absolute gutter. The stock's been going straight down for 3 months. Maybe this gives it a little bit of life here that, we had a big deal, or one of the obviously we had an acquisition in the sector. BPMC is another smaller one. It's getting a big lift here this morning. It's actually bid up at $95. Close. I don't think there's individual company news there, so I think this is just off of this deal. RGNX is bid up here this morning a little bit. Hasn't traded yet this morning, but if you're looking for potential stocks, even and a stock that's in a completely different, they're not obviously in the cancer research here, but or specific to ARRY. But think about Bluebird Bio. It's been in the gutter here too. Could this kickstart a few of these, people speculating that, hey, we may have another big deal kicking around just on some of these previous targets? Because Bluebirds went from 160 down to 117. We know it's been a target. At least people have thought it's been a target before. So could that kickstart? It's trading up 50 cents here in the pre-market, possibly.
You do have some. I'm just looking at the XBI here, and you've been in a nice trading range. You hit the bottom of the trading range in June when you dipped under $80 at 79.31, but trading up $1.28 at 82.77. I don't think that this ETF is anywhere out of the water until you can prove to me that it can get up and over 84. That's really been some highs just under. That's been the top of the trading range going back to middle of May. So until it breaks in that trading range, this small down trend that started a few months ago, I think it's still intact. We'll see if it can get up 84. It hasn't even gotten near there in the pre-market high. In fact, your pre-market high is right there at 83. Even holding up, though. We'll see what happens here in the XBI. S&Ps are starting to fade a little bit here, Dennis. We're up $1.75 at 28.96.50. And you know why I think we're fading?
Why?
Because I don't think the Fed's going to cut interest rates on Wednesday.
What are they giving, Spencer? Do we know what the odds? Do we have like some odds there?
The Fed fund futures are 115% positive that they're cutting rates.
What do you mean 115%? So they're more than 100%?
According to the CME FedWatch tool, chances of a, let's see, it looks like 70. No. They are looking to, I think the rate hike, the rate cut projection is more for the next meeting. It's 22.5% chance of a cut this time.
So they don't think there's going to be a rate cut this week.
You don't think it's they're going to
cut.
cut.
Joel's comment from the record, he was trying to be funny with 115%, but they are definitely on the dovish side. We know that. I don't understand it personally. I don't see what changed in the data besides the market, really selling off in December when they started to get hawkish here. It just sounds to me like it's just purely market dependent and not data dependent. I've said this for a long time. It's, if they want to be data dependent, look at the data. I don't know what they're seeing to make them think, that we need to raise rates. And now we need to think that we need to cut rates. I don't understand it. So anyways, whatever the Fed is thinking here, we can't argue with it. It's the reason why the markets have held up. It's the reason why we had the market rally back in December, because when the market sold off, when they were hawkish, we had that commentary coming from, I think it was Powell, wasn't it? When we were at the lows? Spencer, do you remember December, Joel?
Yep.
Yes,
yeah, of course. They did a complete about face.
Yeah. And that was it. That was the bottom. And we went straight up ever since. We know this market loves cheap money. And they basically told you, even though we're raising rates, we'll lower them as soon as there's any problems. And they had a little bit of problems starting in December. They were quick to get dovish in a hurry. Okay. So the Fed was chicken. They were chicken.
And let me correct that statement. Okay, right. It's July, not June. But what the market's going to be in a tizzy about is what they want to hear from the Fed on this Wednesday is we're cutting in July. We're not going to be patient. We're not going to be data dependent. The economy is going into a major recession. We got to cut interest rates immediately. That's what they want to hear in the Fed statement. And they're not going to say that. They're not going to make such an about face. They're going to come out and they're going to be, we may cut, but we need to see more data. And then they're going to use that for maybe the next couple meetings. But there's just, to me, there's just, if the Fed is doing this, then they're being totally bullied by the.
They are being bullied. Yeah. They have been bullied.
They have no spine if they hike in June, July, or August.
I think they showed they had no spine back in December. When the market tanked, they were scared. They got scared and they turned completely about face. Don't tell me the data changed that much in a month back in December. And don't tell me they're not looking at the markets. We dropped 15% in a week and a half or 2 weeks. It was crazy sell-off, and they panicked. And you know what? They made the whole market turn. So bulls, thank the Fed, because they, if you're bullish and you wanted the rally, you got it, and it was Fed induced. The Fed has kept us up. The Fed has continued to support this market. It's why I continue to remain almost fully invested in this market, because it's difficult. It's difficult to fight the Fed. It's difficult to fight. We know Trump, we had started the trade war when the markets were at the highs. But, it's difficult to fight the Fed.
Does it make you nervous, though? Does it make you a little bit nervous that you have such a wacky Fed? That that they're so wishy.
What is the signs that are going to really tank us, though? What is there's a lot of good arguments here, and you could say this too. Just from a technical basis, it has had a difficult time getting through 2,800, and now you're getting up there again. I mean, where are we on the S&P now?
2,900, you mean?
Or
Yeah.
20? Yeah, sorry, 2,900. Where are we on the S&P now, though?
The cash.
50 points off there.
Yep.
So
Yep.
we are coming. So coming in buying. I don't know if I want to come in and start like loading up here. It's always been the play to be buying the pullbacks, at least in this last 8-9 years. No strategy has worked better than we say BTFD, but we'll leave the F out because the PG show, buying the dip. No strategy has worked better than that in the last 8 years. If you're buying it on the good stocks or the overall indices, it seems to always work. It's been tricky. We've had Gil Morales on this show saying, buying breakouts has not been paying. It hasn't been paying for a couple of years. It's been buying the dips on the stronger stocks. That has really been paying. Even like Kenny Glick was just on. What was he doing? Kenny's a great trader. What was he doing on Friday? He bought a 25-point dip on AVGO. It opened at 252. He would have got almost the low, and the stock started to come right back. So on decent stocks, it has paid to buy the dip. Hasn't paid on stocks like Kraft Heinz. Hasn't paid on certain stocks. But on the overall indices, it has paid. So, you get these significant pullbacks. And even on the last one, I probably didn't do it right in December, but I did it pretty good on this last pullback here because I went that one day at the end of May. I said, okay, I'm buying some emerging market ETFs. I bought the bots, BOT Zebra. I bought Square. I bought a whole bunch. And I was one day early. And, now they're actually starting to look like, these were all pretty good purchases there. Again, just saying that if the market continues to pull back here, the Fed's got our back. So, and they're going to keep rates low, or they're going to continue to get more dovish if the market continues to sell off, which is eventually going to pop the market back up. It's been very difficult to be long-term bearish in this tape.
Correct. And if anything we've learned over this quantitative easy experience over the last 10 years is that no matter how much we cut rates or we do anything, it's not going to help the global markets. I mean, it's just we're the stalwart. We're the one that's been moving up. So no matter
the
how
U.S. has been the place to be in the last 5 years, and this is a great.
It's not going to help. It's not going to help any of these other countries at all. In fact, we're not going to trade with anybody else anymore.
But how much of this, and this is a good 2-3 minute conversation here before our next guest. But how much of this U.S. outperformance is related to that? Think about, we're moving to technology. I mean, the whole economy is moving to more tech. You look at Canada. And, I'm Canadian, but you look at what Canada, do we have any good technology companies? We had, Research in Motion back in the, we have some small little companies, but we don't get the guns like they come out in Silicon Valley. Canada's primary, if you look at just, what's in the, the Canadian indexes there, it's full of big Canadian banks and natural resource stocks. I mean, you got 30% is basically oil. So, I mean, okay, so Canada doesn't set up that well, especially if you believe in global warming and you think oil is not the, is energy source of the future. I mean, that doesn't set up well to go to Canada to invest. Europe has all kinds of problems. We got Deutsche Bank at $6, $7. I mean, what's turning them around anytime soon? I don't know. Emerging markets, yes, China is still big. Yes, China's still done a lot of things, but it's definitely underperformed. You look at the emerging markets, the EEM over the last 7 years, we've gone nowhere. In 2013, the EEM was $41. Today, 6 years later, the EEM is $41. In that same time period, the S&P has went from 160 to 289. So, here's the U.S. market, it's up 60%. And, the emerging markets, if you're just looking at EEM, has gone absolutely nowhere. FXI, same story. China, ETF, $40 in 2013. It's $40 here today. It's gone nowhere. So, U.S. has definitely been the best place to be. And with as much of the, the big guns, think of the Apples and the Amazons and the Googles all coming out basically, in the U.S. These are major U.S. companies. The big technology companies, the companies that have been taking us and running us, are all American companies for the most part. China's Alibaba, which has been good. China has a few, but the best ones have come from America.
Dennis, don't forget about cannabis. Come on.
Yeah. Okay, maybe Canadians going to eventually be all pot. I went for a run the other day, and this is a little bit. I'm not a pot smoker. I'm obviously I'm not into it. So, but anyways, I'm not judging those who are. But I went for a run the other day. I've been running a little bit, trying to get better shape. But on my run, I had 3 separate occasions where I ran into people on the trail smoking marijuana. I'm like, this didn't happen last year. This is the downside of, legalization, full legalization. Like, I don't like it when I'm actually walking my kid on a trail and then I walk by and somebody's smoking marijuana, because you know what? I can smell that marijuana for 3 or 4 minutes on that trail as I'm walking by it. So that means my kid is breathing marijuana. When you drink alcohol, you're only putting that into your own body. If you're doing, the oils, or you're doing, medical marijuana, CBD, you're putting it in your own body. When you're smoking a joint on a public trail where there's kids walking by, the kids are breathing some marijuana. I think if you want to legalize it, it's one thing, but I think we need to start looking, at, where are people smoking this? Are we just going to allow it anywhere? Because I don't want my kid playing at a playground and then there's going to be some teenage kids smoking marijuana around them. Do you see my point there? So
Yeah,
I'm not a big fan of that.
I agree. I mean,
there's a place for it. You want to do it in your own home, it's one thing. You want to do it, but I don't want my 4-year-old kid breathing marijuana.
All right, let's Spencer, bring us back in here.
In the midst of that conversation, we had the Empire Manufacturing Index down 8.6% versus an 11% expected gain. So big miss on that number. That was our number for the day, and I want to talk about AMD also. I don't think we had gotten to that yet. And Dennis, you were saying on the pre-market show that AMD's had a line in the sand here.
I bought AMD. It's a huge level. This is a swing trade, not a day trade, not a long-term investment. I talked about it on the show and saying this is just a classic technical trade. I'll give it a short leash, but I thought it might bounce off 30. It did on Friday. I bought it. I'm still long it. I'm holding that line in the sand. 30.02 is kind of the number, but you got to give them a little bit of wiggle room. When you're doing these swing trades, you can't, hold it for a dime, because you're going to get stopped out on everything. But my whole rational thought was 30 was a spot where he broke out from. We had the run to 34. We pulled back on the AVGO down to 30. Here we are. We're retesting the area from which we broke out from. So can we bounce off this level? I'm hoping we do. So I'm trying it. I'll give it a short leash though.
I'm a little surprised this is not trading higher. Cover of Barron's. I guess it's the CEO, Lisa Su. Was on the cover of Barron's this weekend and talked about the turnaround that she did for the company. So I thought it might, with the market up a little bit, I thought it might get a little bit more love. But the fact that it hit 30, I did see that yesterday, that it did get down there, and it didn't get a super bounce here, but it's a good level. I mean, you've come off $4 hard, so it's a good area.
It's already not responding well this morning, though.
Right.
I mean, we're up a little bit in the market. The chips are not responding well, so I've already got a shorter leash on this because
Sure.
we're down. The relative strength's not looking good this morning. So 30 is very important to me.
All right, we will certainly keep an eye on it. Trading down 11 cents here at 30 and a quarter. It's about 350,000 shares traded, but that usually trades a lot in the pre-market or after hours anyways. Do we got some time here? We do. Really not much to talk about here with the BABA proposed split, right? 8 for 1 here. Also that dual list.
What is that? Give us that news. So this BABA news, I own BABA here, but I haven't read the headline. I just saw, or I haven't read the story. So they're proposing an 8-for-1 stock split?
Right. So in advance of their listing on the Hong Kong exchange, they proposed a 1-for-8 stock split. So, and they had
1-for-8, or not a reverse split, an 8-for-1 stock, right, like a regular stock split.
Regular stock split. They had their investor day is coming up, I want to say in a couple of weeks here.
Yeah.
So that's they're obviously going to vote on that then, but these things always go through. So I feel
you know what? Typically these things, I'm a trader of this. I don't know if I'm going to like trading it as much as you knock this down 87% to get the 12-for-1. Where's that going to trade? It's $20. I mean, I like trading this because it's $158. I trade against AABA. I do the ARRB against it all. I'm going to lose that too because AABA is going off the board eventually to sell. They're right now in the process of selling out all their Alibaba. So I'm going to miss that spread because I do trade those two against each other. And I like trading the $158 Alibaba because it's very liquid, better than the $20 Baba. So as a trader, I don't like this. As a long-term investor, these things tend to help the stocks because they get cheaper and they actually, for whatever reason, they got more people that come in and they don't like buying a $158 stock, but they buy a $22 stock. I mean, that seems to, always, help the stocks to a certain extent. So as a long-term investor, maybe it helps, but as a trader, I don't like it at all.
It's funny because when that liquidation came out, you kind of thought that it would be like some, bring out some natural sellers in it, right? And that came out on Tuesday, April 2nd. And if you sold there, you were a little bit early. I really, I thought it would have a longer term effect. And instead, they waited till it got back up close to that $200 level, got to 195.72. Market conditions, trade talks or whatever. But, you did have a big seller in the market and, eventually took it down. But same way on the 8-for-1 stock split. I mean, it doesn't, I know you like trading it because it's a higher price stock, but how much does it change the value of the company? How much does it change the earnings? Nothing. So I have to agree with you on that. We got 5 minutes before we bring in our final guest of the day. But let's want to talk a few ratings here this morning.
Yeah, there's a couple.
Okay. What would you like to cover? Deer? How about Deer up at Beard?
Okay. Oh, was that my cue? Sorry.
Yeah, you're the news guy.
Okay, sorry. Deer upgrade to outperform at Bear today. Price target raised from 129 to 175.
Stocks come a long ways back off the lows. This 155 was the breakdown area. We're going to revisit that potentially today. That makes me think I'm almost more inclined to sell the BOP here than come and buy it now. And if you look at the 90-day chart, you can see what I'm talking about. March, you bottom right above 155. You had the 155 in April, come down there and kiss at 155.76, and then eventually broke down in May. Now you're coming all the way back up there. So everybody who is picking the bottom, basically at 155, is probably looking to get their money back. We always say price has memory there, and loss aversion is a psychological behavior from behavioral finance there behind that. 155, I think, is a line in the sand here. I think that's where I'd actually be more inclined to short it.
Yeah, I mean, you got a clear breakout on the dailies here over 152, pair of highs right there from Thursday and Friday. So I think I'd be more inclined to, try and buy this back at 152 than try and buy it up $1.22. We will look for, immediate action, immediately follow through off the open. No daily highs there. I can see what Dennis is looking at the prior lows. If you're very bullish this stock and you're just looking at daily highs, there's a pair of highs from May 9th and 10th, right at 156.30, close at 155.50, 55.48. But I don't know. I'd rather see this come back into resistance here at 152 than chase it up $1.85, a little bit over 1%. SPOOs go red here, Dennis. We have given back all of those overnight gains. We are now trading red on the session here. So that rally, we are now over 10 points. Looks like our high of the day is already in here, Dennis. 29.04.75. Looks like it's going to stand as the high of the day.
Disney got a downgraded Imperial, so picking on me and Spencer Israel, we know we're both still long that stock.
Valuation, or what did they say the reason?
Didn't look at it.
Okay.
Do we know?
Nope.
Rattler quiet period is over. RTLR. Not that anybody follows that, but it's newer IPO, and there's like 25 ratings on it today.
Kinder Morgan downgraded at Stifel this morning from buy to hold. Dow Inc. downgraded BMO Capital to neutral. What else do I see here?
Symantec got an upgrade.
Yep, I see that.
And the other one that I saw was KDP, Curry Dr. Pepper, upgraded BMO to outperform.
Dr. Pepper. Never was a fan of Dr. Pepper. You drink Dr. Pepper, Joel?
Diet Dr. Pepper, yeah. And they got great commercials with that guy in the locker room and stuff. Did you mention Mosaic up at Bank of America? That's trading up 74 cents here. That's a really big move for that stock. Pre-market high, and that comes in at what was your pre-market high here? Over $23. Keep an eye on 23.37. That's your pre-market high in Mosaic. That's a big move for that stock. See if there's any volume associated with that.
Chat alerting us, BID halted right now, Sotheby's, and it looks like David Faber just tweeting out that the company is to be sold, and we are awaiting the press release. So BID looks like David Faber is saying it is going to be sold.
Sotheby's, huh?
Sotheby's auctions.
Interesting.
Nobody saw this one coming because this stock has been in the gutter too. From July, July 1 year ago, we're trading up at $60, 35. So people are going to get their money back. I don't know if the 60 guys are going to get their money back. So maybe some people here today will have to see what the premium is. So when that headline crosses, the show's going to be over, but the headline's going to cross.
Oh no, the show's going to still going because we got our final today, who I am bringing on right now. New guest joining our program, Steve Kalayjian. He is the co-founder and chief market strategist at Tocker, and I believe, Joel, will he be at the summit?
Yes.
Am I making that up? He will be at the summit. Steve, are you with us? Good morning. Not sure if he's. Nope. He's here, but I don't hear him. Steve, if you can hear me.
Hey, good morning. How are you?
Hey, good morning. How's it going?
Hey, how are you?
Good. Sorry about that. Yeah, I had emailed the wrong Steve Kalayjian, so I apologize for that.
It's no worries at all. No worries.
But we got you here now. We'll just jump right into this, Steve. What are you seeing in this market here this morning?
Well, right now the S&P's just dropped to new lows on the session here. Right now, no opinion. It's going to wait for the markets to open. I have from Friday, I have buys on 3 of the 4 underlying ETFs: the spiders, the Qs, and the diamonds. And the Russell was weak on Friday. And if certain numbers get taken out on those 3 ETFs, I think we're going to reverse to the downside. But still early in the game here. Euro stocks just pushed down to new lows. 10 and 30-year bonds pushed up. Gold exploded, taking out that 1341 this morning that I called. So again, just looking for trading opportunities during the day, and just being consistent. That's it.
All right, Steve, we have an interesting week coming up. We have a Fed meeting where they're not going to be cutting rates, but are supposed to be talking, giving us a tone of whether or not they're going to be data dependent, or it's just a outright conclusion that we're going down in July. And then you have a quad witch on Friday. So a couple big events. When you have events like this, do you modify your trading style? Also, if you believe in summer markets, well, it's not summer weather here, but it could be coming into some summer markets. Do you adjust your trading style at all for big news events, or you just stick with your indicators?
Well, first of all, the real big event is the Benzinga event on Thursday.
Oh, come on, Joel. What are you doing over there?
Come on. That's the real big event. So let's go with the Fed number, the Fed announcement. Again, everybody's all hyped up about cutting rates, and so I don't know. I just think it's still early in the game. Again, the language is going to be what everybody's going to be looking at. As far as summer months are concerned, yeah, there's always periods of slow. I mean, there were times on Friday where the S&Ps, I don't think, did 600 contracts on a 5-minute bar. It was like really dead. And obviously with the quadruple witch on Friday, none of these really make a difference to me. I don't trade into any economic news. So leading up to the Wednesday minutes, we stop around like 1:15, and we just let the dust settle, and then if opportunities arise after that, we're in it like 30-40 minutes after that till the close. But you don't start hindering your trading right now, because I'm more intraday and swing trading. From now until Wednesday at 2 is like an eternity for me. So but there's a lot of opportunities between now and then.
All right, Steve, you have a potential to be a fan favorite here on Benzinga's PreMarket Prep show, and because that's because you have some floor experience. During the years of 89 to 91, you held positions at the Comex and the New York Merc, and on the board of trade too from 92 to 2004. So were you one of the guys upstairs in the office, or were you down on the floor?
I was always on the floor. I started on the Amex, then went over to the big board, went over to the Comex, and then on to the board of trade. And great experience. And just every single day looking forward to hearing that roar, that passion. Everybody just fighting for every nickel to be made. And then eventually in 1990, 91, I decided to go upstairs and start trading a gentleman who really, till this day, no one has given him the recognition. He was actually a floor broker on the floor of the New York Stock Exchange. Decided to put a pool of capital together. He had a brand new condominium overlooking the Hudson. So every morning I waved to the Statue of Liberty and to the Colgate clock. And we just sat there, 3 guys, and trading his money. And he actually started the upstairs day trading philosophy. And that's where I was really privileged to be one of those three and to pioneer the path for others to do so.
And who was that?
A gentleman by the name of Joe Salentano. And he had a vision of really building an upstairs presence of guys trading off the floor. Because if you were on the floor, the New York Stock Exchange allowed you to be an RCM to trade on the floor, but you had to yield to the public. You had, so many different rules and things that you were kind of prohibited from doing. But upstairs, you were allowed to do anything you wanted. You can enter orders, and you could match in the crowd with against orders, and so it was a really good, really unbelievable vision. And look where it did. It opened up so many doors for prop firms and for trading firms along the way. Broker dealers benefited, and a lot of big firms started up because of that. So that was back in 1990, 1991, many moons ago.
Yeah, Dennis and I were beneficiaries of working with Bob Bright from Bright.
Yeah.
Bob Bright. It's not, we got involved with them a little bit later, but they definitely saw the opportunity in off the floor trading. So, kid, this is a PG show here, so we always get good floor stories. So you got a good one that you could share with our audience, and it could be a good one,
yeah,
a bad one.
Well, I'll tell you, my favorite.
Okay.
This is my first trade I ever did on the American Stock Exchange trading floor. And so I started on the Amex in '83, and I had $3,000 to my name and cutting lawns at $2.10 an hour. So under 1,500 hours, I worked to collect that money. Opened up a brokerage account, my father's friend. And I don't know, on the Amex, there was the options market and equities. So if the options traded, the stock, underlying stock traded on the New York Stock Exchange. So there was a stock called American Can, and it was a Dow stock. And I'll never forget this. So I knew what a call and a put was. And so I decided sometime, I think it was October, to buy a Feb 50 call at 2 3/4. And so half my money was already spent on 5 contracts. And I just watched the stock around 51, 52, 53, whatever, I don't even know. And then next thing I know, within months, the stock went all the way down, I think down to 41, and I bought up more all the way down. I think I bought a total of like 15 to 20 contracts, and then I was done. I remember like a week before expiration, I actually sat on a Friday with my head in my hands like this, and somebody patted me on the back, and he said, "Kid, go home. Go enjoy the weekend. You can't turn the machines back on." And I remember that I think it was a cabinet to a stint. So there was no bid. It was like it was worthless. So I figured, oh my God, all these lawns that I cut along the way, and I can't believe that I lost $3,000. And a week before expiration, the stock went from 41 to 53, and I sold everything at 345. I think I made like $1,800 on top of getting back my 3,000. And as I'm hanging up the phone, I see my father, because he was a floor broker on the Amex. I saw a tear in his eye, and I said, "Hey," he says, "are you out?" I said, "Yeah, I'm out." He said, "Good." He said, "When I walked on the floor on Monday, I saw a penny faced up, and I bent over, and I wished that you wouldn't lose any money on this." So he said, "What did you learn from this?" And I said, "Whenever you have a losing position, you look for a penny faced up." He says, "No, you idiot." He said, "You never average down." So that was my story on discipline. And that is a God's honest, true story. And then I went right into buy 10 Merrill Lynch calls, right? I was addicted. So, I mean, those are trades like you never forget, and things that, really transform with you. So I never really had the desire to keep averaging down without, protection. Obviously, no one's bigger than the market, and that taught me a significant rule of discipline, and to the point where you just preservation of capital, right? I mean, you work hard, and you just gotta be able to know that you can't trade without having stops in place. And there's a difference in scaling into a position and averaging down, and that's not something that I preach.
You said American can. It wasn't American cyanamide, was it?
No, that was ACY, I believe.
Okay.
Oh my God, I still remember these symbols. I can't.
I know.
Holy cow!
I
No,
gotta
American
say,
can. It was a Dow stock.
I gotta go.
Yeah,
American
I
cyanamide.
remember that. It was the. Oh my God, I can't. I don't have Alzheimer's yet, or
So what are you going to talk about at the summit on Thursday?
So on Thursday, I'm going to talk about the basically, I'm going to talk about my Tocker platform. I'm going to talk about the projects of we're coming out with a new live stream and the widget that the content that we're providing for all our relationship Benzinga, our member firms, and technology companies and exchanges. And I'm going to give a subset of what I do in my 8-hour a day. And one of the things that my research has shown me in building the analytics that I spent 8 years in building is that when you trade the futures markets, it's very, very important, especially during the US session, that you just can't trade the futures markets if they has an underlying ETF to it independently without the understanding of what the ETF is doing. So the two words that come that I pound every single every single day is correlations and disconnect. So when the S&P futures correlate with the underlying ETF, or when the underlying ETF correlates with the S&P futures, or vice versa, the NASDAQ or 30-year bonds or whatever, gold with GLDs, you'll see that the power of the move when they correlate. So I have a bunch of examples of that. I have a bunch of examples of showing how my predictive analytics can pick up trends and reversals intraday. So I'm really excited to I only have 10 minutes, so I got to do a lot of fast talking, I guess.
Well, that's a lot like Dennis's strategy, Joel. So that'll be good to get.
The over/under on Dennis's is 3 sentences for his.
Yeah, 10 minutes. I know it's gonna be tight with everyone with 10 minutes, but we're doing our best to get everyone in. So
listen, I love the opportunity. Listen, 10 minutes, and listen, I'm available all day for questions and answers all day. So I'm there. I'm not going nowhere. So, Jason and I are gonna try to grab a lunch or something later on or something. I don't know. He said depends on which direction he's going in. So we'll see.
All right. Well, Steve Kalayjian, co-founder of Tocker, chief market strategist, as you can tell, longtime veteran of these markets. Steve, thanks so much, and we will see you on Thursday.
Great, guys. Thanks again. Right. Have a great day. Thanks, guys.
All right, have a good one, Steve.
You too.
So that'll be it for today's show, 9:13. As I've been mentioning, if you want to go to the Benzinga Trading Summit, it is in 3 days. bzprofit.com, promo code PMP, all caps, PMP 50. That'll get you half off your ticket to either the main stage or the trading floor, where people like Steve and Dennis and others will be presenting on a more in-depth scale. Thank you to today's guests, both Steve Kalayjian and Kenny Glick. I want to remind you all that all the information on our show is for informational purposes only, not meant to be investing advice. And that's all she wrote for today. So everyone, Joel, any final thoughts on today?
No, we're just
all
hanging up here, up $1.25, 28.96, pre-market low. Got all kinds of support right there at the close or just below the close. So see if we can hold that, get back up to the pre-market high. Things open up for about 10 handles on the downside if we can't hold that 28.94.
All right. And on that note, everyone, have a good rest of your day. We will see you on Tuesday.